Well, the Nigeria Bankers Committee met over the weekend to discuss a range of issues relating to the banking sector, including the adoption of the International Financial Reporting Standard by the banking sector and the ongoing pilot scheme to entrench a cashless economy in Nigeria. Wole Famurewa caught up with the Central Bank Governor Sanusi Lamido Sanusi. Let's take a look.
A number of banks already have been ahead as far as IFRS was concerned. I mean, banks that have, for instance, gone to the international markets to raise capital have had to work on IFRS. Banks that have subsidiaries in Europe have had to work on IFRS. And many of these systemically important banks have had some kind of exposure through their international activity to this. The real challenges has been actual documentation implementation. So, for example, the classification of these portfolios and the records of keeping and the rules around tainting of a portfolio, the threshold beyond which it is tainted. These are issues that needed clarity and consistency. So we needed to work as an industry, the regulator and the banks, to arrive at what is going to apply going forward based on what IFRS says and based on what we see in other regulatory environments. So that is what has been broadly agreed. Obviously, it will now come to the Central Bank and NDIC, and we'll look at it, and we'll come out with final guidelines.
But on the rollout, on the takeoff date, what's the update on that? We know that it's supposed to take off this year.
Well, it is taking off this year. Certainly, we all accounts prepared for 2012 will have to be based on IFRS and IFRS compliant. And remember, the workshop yesterday included banks. It brought in DMO. It brought in auditors as well. And whatever we decide finally, we'll still have to go to the Financial Reporting Council, which is really the one that has the authority to set accounting standards, so that we know exactly what in IFRS is being adopted wholesale and what we are adapting and what timelines we have.
Well, the final point on IFRS, there is some concern about bond portfolios. It's been discussed for a while now. How concerned should investors be about the impact that mark-to-market losses, for instance, could have on performances that will be reported this year?
Well, the numbers I've seen have been crazy, and I don't think they have been. The people who are writing those numbers understand that when you hold to maturity, you don't mark-to-market. So a lot of those bonds on the books of banks are held to maturity bonds. A very small fraction, really, has been held for trade. And part of what we'll work on is give the banks a grace period. I remember that even under IAS 39, they were supposed to mark to market, but during the crisis, the central banks really did not impose that strictly. So what we want to do is from March this year, when accounts are published, we would like to see what the final classification is and then apply the rules going forward. There are a few issues like the available for sale, for example. Do you keep hitting your capital account every time there's a movement in price? Because movements in capital have implications for single obligor limit, the implications for capital adequacy ratio, and if there are things that just fluctuate on a day-to-day basis, do you really want to have that level of volatility in your capital? So those are the kinds of things that were discussed. And then what is the holding period for AFS? What is the holding period for held to maturity? What's the holding period for, what is the turnover period for what is in the trading portfolio, and so on.
Final point on the Cashless Lagos project, if you like. It's a pilot project for the cashless economy project that should be more nationwide. Give us an update on that. To some extent, there is a feeling that the public perception of that move is still somewhat negative in terms of the cost to the users, to bank customers, for instance.
I don't think we get that sense. I think it's more the need to communicate further. It's also the need to fast-track the rollout. We have rolled out 16,200 POS terminals. We're supposed to be at 40,000. We've just agreed, and we know the specific banks that have shortfalls, and we're going to, by March 31, have about 45,000 POS terminals. The real question is, do you restrict? We're going to have them in the merchants. We're going to have them with the hospitals. We're going to have them with the schools. Now, the cost of taking out the cash is high, but we don't think that is a problem. There are complaints about the cost of depositing cash, what you will look at. But there will have to be a cost, because if you don't have a cost for bringing in too much cash, then you don't have an incentive for asking your customers to pay with cards. So these are the kinds of things that, again, they were discussed. The feedback from the market, the experience so far, how do you improve on it? The greatest risk that Cashless Lagos or Cashless Nigeria would face is really not a cost risk. Okay, it's a risk on, do the telecoms companies provide the network that's available? Do the banks make sure they have a transparent process of applying charges? If there's a fraud, is there a very quick turnaround time for addressing the fraud? Do our own staff who might think their jobs are threatened if people stop coming to the banking halls, do they properly market and explain these to customers? So a lot of those risks are within the control of the industry itself, and that's what we're looking at. Consumer protection in particular, against arbitrary charges, against fraud, okay, and very speedy turnaround, and also working with parties that are not banks, like telecoms companies and PTSPs, to make sure that they do not produce weak points in the chain.